Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on the MJ sector. Looking at WEED, we had a bearish close under 880, and that was a bearish close because we had not closed below that level at any point in the last 3 weeks of trading. We had a descending triangle pattern with that horizontal base of support and lower highs. So this is a bearish break, and we now are looking at support of 862. And if 862 breaks, that's even more bearish because that's the lowest price that we've hit in almost a month. And we would have to establish a new support level if that were to break. So increasing bear volume, bearish TCG cross potentially going to follow through. And it's not over yet for the bulls in the short term, but it is another point in favor of the bears. So the weekly time frame, still healthy consolidation. Bullish MACD cross is on its way going through, and the middle Bollinger Band of 857 is still holding. So a bull break for 2 weeks and then 3 weeks of healthy consolidation, nice and contained. And the bulls are looking to establish that new higher low, which again at this point is that 862 level, but it's not convincing that that's going to hold at this point because we did just make this bearish break to end the week. Looking at APH, APH is also seeing the same kind of pullback where we have a clear channel with the 200-day moving average support. We have bounced off that level twice, and the 100-day moving average resistance we have rejected from about 5 times in the past 2 weeks. So we are approaching the support level. On Monday, that's going to be at about 581 or so. And if we close below that level, we're looking down at 565 and 562 as the key support. So a bear break on WEED, bearish action on APH with slight increased volume. We keep seeing this narrative coming back about what is going to happen with the regulations, and it's being priced in, the bearish action in response to that. So have a play set in your mind where if it comes out that the regulators are not going to be changing anything and everything's going to stay the way it is and the brokers are still going to process transactions, then you know to jump in on APH because APH and the market would respond to that and it would price in what has been incorrectly being priced in right now. If that were to play out, that would end up being incorrect. So the market is being cautious. We keep seeing the same story coming up. And clearly, as WEED is not seeing much more strength, it's hurting the whole sector, in my opinion. And, you know, WEED is doing everything it can to try and separate itself from the matter with press releases and interviews. But I guess they're not anticipating the strength of the correlation in this market because they're being dragged down a bit as well as APH. We're not really seeing much inverse action whatsoever. So keep an eye out on that potential news, which would provide a short-term bounce for APH. APH on the weekly time frame, backtesting and rejecting from the middle Bollinger Band 2 weeks in a row. It's preventing this bullish MACD cross. The 50-week moving average support will be the next level we look to if we do lose 562 support, and that level is going to be in the low 540s to start this coming week. ACB on the daily time frame, also very tight, also close to breaking a pattern bearish, where we have our low, high of the bounce, higher low, lower high, higher low. It is a bullish candlestick. It's the most bullish candlestick out of the 3 so far. Support is 241, higher low of 243. Bulls have to break 253 to break this lower high pattern. So a couple higher lows. Current range to be watching is 241 to 253. Whichever one breaks first is going to dictate short-term direction. Checking the weekly time frame for ACB, we have an upper wick of profit taking the past 2 weeks. No real significant follow-through at this point, and it's not as clear a trend due to the lack of price history, but also due to the bearish action we saw on ACB with a big setback due to dilution and bearish action in the market, which has put the bulls at a bit of a disadvantage comparatively to the other names on the weekly time frame. They're still trying to recover, but it's certainly not as confidence building looking at this weekly chart compared to those other names. EMC on the daily time frame, bulls bought the dip significantly. If you're playing EMC, you need to have an appetite for risk and reward because it's high risk, high reward in both directions. Very little volume can move the price very significantly, which is referred to it being thin. It's thinly traded. Not a lot of shares on the bid nor the ask. So we dumped down on very low volume and dropped, 15 cents. And then we bounced back very quickly. And it is a bullish candlestick. The bulls are hoping that our higher low now is established at 172. So if we can get a higher low and then see a bull break of 190, we'll have a higher low and a higher high, a bullish MACD cross on the daily time frame. And the weekly time frame, the bulls are looking for this to be their higher low. Same story. We have our low, high of the bounce, higher low at 162, and the bulls want to see a break of 211 to see a higher low and a higher high, a weekly bullish MACD cross, and a trend change. Most importantly, we have not changed the trend since it has been bearish after the first month of trading, and that would be very significant going into the end of the year. I am liking EMC because I do have a high appetite for risk, and that is a setup that I'm really liking. And right now you could make an entry and put your stop below 162. If you wanted to give it more wiggle room, you would use the lowest price we've ever seen of 150. But it's a 20-cent risk if you're using 162. That is fairly significant, a 10% drop. But again, if you allocate the appropriate capital and knowing that that would be your risk, we could very easily see this trend change. And if we do, the reward is going to be greater than a 20-cent risk. So it's going to get very interesting. Bulls need to see an increase in bull volume, ideally next week, and a break of 190. The sooner the better to give the bulls that confidence. FIRE, daily time frame, seeing a bounce play out. Been pretty weak consistently all of August. Not really as much bullish action as the other names. 108 is our new base of support. Resistance is 116, followed by 121, and our recent high was up at 132. So 108 is a must-hold level, and we are not seeing a ton of follow-through from this point at this point. The weekly time frame is a bullish reversal candlestick, so it's the same thing. We're coming off our low. We set our high of the bounce attempt. We now are looking for our higher low in our bullish reversal doji. Bulls have to confirm that with a break of 116 and a green week next week, and then ideally break 132 to start changing the trend on the weekly time frame. And we have to see that higher low and higher high to do so. So 108 is a must hold from here. HMMJ, weakness, bear flag on the daily time frame, close to being confirmed. So we have our low of 850. We're down here to 852. We must hold 850 and break 872 to see a higher low and a higher high and the start of a trend change. Otherwise, we are going to break down to lower lows. HMMJ is not looking ready yet. The weekly time frame is trying to build a base of support, but if we do break these support levels of 850, 836, it's going to be further downside. So I am personally staying away from this name at this point, playing the other names as I see fit, but not liking where we are set up here on this ETF that does still have U.S. exposure, and certainly the last 2 weeks and the uncertainty with names with U.S. exposure is hurting this ETF. So that's what we've got heading into this coming week. Certainly not the kind of news that the sector is looking for, but we have to be ready to accept that in these coming months that are going to be pretty dull months, we've got, just about 11 months until we're looking at legalization. A lot can go on. It's more likely to see bearish action than bullish action, just in terms of how easy it would be for articles to spook people and to make their rounds. But we need to accept that and, be patient if we're holding long, or be agile and be in and out and pick our spots and wait till we see clear bullish action in terms of reversing trends. So the more cautious trader on AMC would wait for the break of 211 to get in to ensure that that trend has changed, whereas a more risk-reward tolerant trader would get in here and use that 162 level as a stop. So it all depends on the individual trader and what they're looking to do and the time frame they're looking to do it in. I appreciate you watching. We'll check back in next weekend. Have a great rest of your weekend.